Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at Monday's trade action, we saw mostly lower trade as we took a look at the markets with grains mostly to the downside pressure there. A little bit more mixed activity in the livestock trade, but overall we're entering that week before Christmas, and it's typically a quiet holiday week. But we're going to talk through things, get some thoughts with our good friend John Heinberg, Total Farm Marketing, joining us here today. John, hope you had a good weekend, sir. Glad to have you back on here for the show today.
Yeah, just getting kind of ready for a snowstorm the way it sounds, at least coming through our area. I know some of our northern clientele has been dealing with it up there in the Dakotas and that region for the last handful of days, and now it seems like another one's coming through there and headed to us. So Merry Christmas, I guess you want to say, between bitterly cold temperatures and snow this week.
Yeah, I think most folks, if they don't have a white Christmas yet, they're going to have it. I know talking this snow and this Arctic cold is going to be getting pretty deep into the U.S. here in the eastern half this coming week. So we'll have to watch to see what happens there. And of course, watching to see what happens in these markets. And typically, as I alluded to, this is kind of a quiet 2 weeks in the trade here as we get to Christmas and New Year's. But coming in on Monday, a little downside pressure in that grain trade. I wonder if that was maybe just some pre-holiday selling, position squaring, some jitters here, low volume. Overall, 1,000-foot view, John, to start, what's your thoughts on some of that pressure in the grain trade on Monday?
Well, let's go right to that soybean market. That's where the biggest push there was today. And we saw some of the forecast models for the end of the week here bring some moisture into Argentina, and that kind of weighed on that soybean meal price. Then we saw some breakdown of that meal oil spread where soybean oil was directly higher today, profit taking on the meal side, all kind of weighed on the soybean complex. And, it's a complex that's a little bit concerning at the same time. We think there's some optimism there, but you go look at the March contract for soybeans right now, just talk about a ceiling. Realistically, since we broke apart back into the July window, we've not made it above $15 with the exception of one trading day. But over 20 plus times we've traded higher than $14.75. So that just tells you that the $15 handle is a sell point. Now, if we get some momentum, basically get some news, probably some demand beyond what we're looking at now, or maybe an adjustment on the later reports on the size of the carryover in a positive way in terms of price. We break that 15 barrier, you can really see some money kind of kick in, but it seems like we're just kind of stuck here, with the inability to go through. So for producers, probably need to make sure we're moving some sales or putting a floor in here. If you sell the grain, you think we're going higher, buy that call spread. If you want to hang on to the bushels and play the cash market, then make sure you got the floor underneath this thing, because that South American crop is still coming out of Brazil. We might lose 5-10 million tons of beans out of Argentina, but the combination between the two and what they're forecasted for production will still be a record on the global balance sheet compared to where those two have been in the past. So that's just still something to keep cautious as we move into 2023 in terms of what's going to be happening with that market. So again, maybe today we just, with the lighter trade, the lack of people stepping into the market, just didn't want to fight that upside or that downside pull on the beans, especially with the forecast being a little wetter, in a weather market.
Well, I'll get to some thoughts I have with demand in China here in a second. Quarter wheat, though, on Monday, we're down, not as hard as beans. It seems like quarter wheat have kind of been working together the last couple of weeks, John.
Very much so. It kind of just seemed like one would be the anchor over the other. Mostly it was wheat being the anchor over corn, or the balloon to lift corn a little higher if it wanted to move a little bit. Today maybe it was a little tied more to that soybean market. Again, just the lack of players and the overall direction of things. The funds are still got some length on corn. They've really brought that position down quite a ways. But there's still a little bit of room there. Obviously the Argentina weather does affect corn production as well, at least maybe some early bushels in the harvest window here, or when they get into the harvest window, to compete against us on the export market. I think as though corn is starting to get a value, with that weakness we've seen in the dollar, with the breakback in prices, we're getting to the spot now that the corn export program will probably start opening up. We got a sale of corn to Mexico this morning, at least announced. I think we're going to see those numbers starting to grow as we go forward. The only problem is we just don't have a lot of sales on the books right now. So we're going to need to see a lot of constant sales to get those bushels shipped out, or we're going to continue to see more adjustments by the USDA. I think right now with today's export inspection, we're about 180 million bushels behind the USDA projected pace to hit that export target. That's a big number when you think about it. We add that into the carryout, and that gets carryout back into the 1.4 plus window. That's going to weigh on prices if that is realized. I think with the price of corn where it is globally, we haven't seen the big Chinese business. They're probably buying a little bit more hand to mouth here because of the higher prices. In other words, they're not locking in big purchases, take and deliver on it. They're going to buy what they need. And if the price is right, you'll see them step into the market and pick up some bushels. Again, it's probably still not going to see the level of purchases that we've seen in the past because of the Brazilian bushels that went in. But again, with higher prices and maybe the trend being a little lower, what's the hurry to dive into the export market right now if things are maybe coming back to you as an importer and picking up those corn sales down the road?
Couple of things there that are sparking some thoughts in my head here, John. And, you mentioned the export window may be opening up for corn. I wonder, does that mean that the export window for soybeans maybe closes? And a second part to that, with China, we've seen China step in and buy the break in this bean market quite a bit. Will they step in and buy the break in corn? They're having COVID issues right now. I wonder how much that could play in as well, John.
I still think that's a major concern, and a lot of it's just the uncertainty of the information coming out of there. Now there is some restrictions, which may have been a topic headline favorite to the market, but then you think about it, the COVID cases are going to spike. The concerns regarding death loss could spike. What's going to happen to the consumer demand, in that regard still could come into play. So that's something that's going to be a springtime watch as we move into the winter, into the spring, and what happens over there. Again, obviously, it's hard to get true information out of that country, because obviously they're going to try to save face a little bit in terms of what they're going to put out there for information. But that is a concern in the market. I think that's what's been weighing on the energy markets. I think that's some of the factors weighing on, the break in pork prices here recently, as well as the soybean market here today. It's just that overall demand is just not there. They still need food, and everything we keep hearing is that they got issues in that regard. So there's still going to be a need for some grains. There's going to be a need for products overall, but at the same time, how much is going to be that demand, and that's going to be a key. So again, things to kind of watch. You mentioned as the window for beans exports closing, more than likely every day we get a little bit closer to that Brazilian harvest. Those prices are well under U.S. prices. And again, we're going to see that demand shift over. We've already seen it as much as they're buying U.S. beans here in the front end, they're locking in supplies for that back end with that Brazilian crop coming and the value that it is compared to U.S. beans. So again, a little bit cautious again where that bean market might get to after the first of the year. Maybe we got a little bit more run if the weather in Argentina continues to be difficult. But again, still pretty good value out there that producers maybe need to watch and take advantage of in that soybean complex.
Well, and I think with corn too, and I know, we were discussing these export thoughts before we went on the air too, but with corn, Mexico obviously is still buying U.S. corn, although we have those issues out there about that upcoming GMO ban. I wonder though if maybe, Mexico and some other countries step in to buy U.S. corn instead of China, but I feel like that's probably an unknown at this point in the market that you can't really prepare for one way or another.
Realistically, when China locked into Brazil and those bushels there, didn't change the supply picture at all. Okay, it probably just reshuffles the deck chairs in terms of where bushels need to go to. The lack of bushels coming out of the Ukraine, even though we are seeing some movement, is still going to be a factor. Okay, we're looking at percentages difference in what they normally ship out. So countries in Europe, countries outside of, in terms of Africa or Japan or South Korea, which may have gone to Brazilian bushels in the past, now are competing against China, and those bushels aren't there. They need to find their supplies. And like I said, real soon here, we're going to be the only game in town on the export front, and I think we should see that business pick up. Again, is it going to be enough? That's the big question in that regard to get us, back from making any further adjustments on the demand side of the table. But again, like I was saying, though, probably having China step in, buying that Brazilian corn as aggressively they have, just makes those other importers have to look to other sources. And realistically, if it's not the Ukraine, the only other source out there is us.
John Heinberg, Total Farm Marketing, is our guest analyst here today. John, one thought in this wheat market as well. I know we talked to our good friend Eric Snodgrass, looking at the weather for the week ahead, very cold Arctic air. That could impact some winter wheat that doesn't have snow cover and give some winter kill. And I wonder, just looking at the wheat market, if that's maybe an underlying theme here that we could watch throughout the week with that bitter cold weather moving in.
I always hear you got to kill the wheat crop at least 3 or 4 times every year in the winter wheat market. So we'll have to kind of watch how it comes out. Always seems to be a trend and gets us a little price boost. Maybe we priced some of that in last week. We knew these forecasted temperatures have been coming here for a while. But today you still got to say winter wheat hung in there fairly well. Came off the low, held moving average underneath. You got a little bit of an uptrend there. Now we need to keep climbing, and basically in that regard. So there's probably a little premium getting put in. Again, our still biggest problem with wheat is where we are on the demand side versus global wheat prices. We're still struggling there overall. Now we don't get crop ratings unless they're the individual state breakdowns here for winter wheat. So that kind of puts us at a little bit of a disadvantage of what we may have out there until later on in the spring. But again, we got to watch this weather. I mean, there's going to be some nasty stuff coming through from the temperature standpoint. The market will probably bring some of those prices in, at least in the short term, until we get a clearer picture.
Well, I think that weather's going to have an impact on livestock as well. Let's move there. I know cattle and hog markets on Monday, fairly mixed activity. Was it a bad day? Was it a good day? We'll just call it middle of the road, it felt like. We do have a cattle on feed report and a hogs and pigs report coming up here on Friday after the close, heading into Christmas. Wonder your thoughts in this market. It feels like maybe traders have one eye on the weather, especially the cattle market, and the other eye on those reports coming up on Friday.
I think very much so. And I think that was some of the movement we saw in the hog market on Friday was kind of maybe tied to those forecasts coming ahead, because when you start getting snow and bitter cold, that affects weight gain, that affects animal movement. So that brings a little pop into the cash price, and the futures market maybe coming along with that a little bit. Plus also, too, there's just a seasonal tendency. When December comes off the board, which it did last week, we get a pretty good run to the end of the year in those front-end contracts. So maybe that was some of the trigger that we saw, was just some short covering and just buying on that side in terms of the historical front. Again, these markets, all of them have been really fighting those historical patterns or staying in them patterns pretty well. That's, I think, what the algos are just tied to. We don't have a reason to sell. The historical say sell, or vice versa. So we'll have to see. But again, as I was getting to, with that weather coming through, how does that affect animal movement? How does that affect weight gain? Hogs seems to be a little bit more susceptible to that, obviously, because of the type of animal they are, and maybe gives us a little bit of a boost. Obviously, quarterly hogs and pigs this week, we're expecting to see those hog numbers tighten down. We're not expecting to see that expansion kick in yet. It's pretty hard to do when you had corn prices where they were all year. And I think we're seeing that as that strength out in that June, July, August contracts about the lack of hogs that we could have out there, what the farrowing intentions are. As we're looking at 107 basically now in those summer months, just short of that in July or June and August. So there's some good value and good premium being put into the marketplace here. So we'll have to continue to watch that going forward. Shifting gears over into cattle, it's about cash trade. Last week was a little bit, steady for the most part. Kind of encouraged to see the Packers hold in there, especially with Packer margins kind of tumbling. We had a lot of volatility in the retail market to start the week last week too, so that was pretty interesting to kind of see how that played out. But again, same thing with cattle on feed. We're expecting to see those numbers come tighter again. Probably another 3% lower than last year on terms of cattle on feed. Placements down another 2 to 3% from last year. That's just going to show where those cattle market needs to be. Now, we got a lot of premium all the way out into next fall and winter, and it's probably still merited. As long as the demand can continue to hold, the cattle numbers are just going to stay tight enough that this market's going to have a lot of support.
Well, I wonder, heading to the end of the year, if especially cattle producers, if they have it, do they need to look at maybe getting some hedges in place, locking in some floors here, even, with the thoughts that we could see this cattle herd shrink even more on this December report, John?
I've been picking up some puts all the way through it. If you're going to do anything on the defensive side, which you need to, and you got, historically high value in front of you, And again, we got a lot of uncertainty regarding the economy, what's going on with the stock market, what could we fall into recession, the aggressiveness of the Fed in terms of keeping interest rates in play. Those are all things that could be headwinds over this market. Cattle market's poised to continue to run, but if it takes off and the pork products are still there, you're going to see the consumer shift, and that could hurt the demand side of the equation. So, but for me, it's about price flexibility. You go look at 150 puts, 155 puts. I mean, those are historically good numbers. Put that underneath that cattle market. At least, if you wake up and we got a washout for 3-4 days in a row, you've got yourself protected. But at least if the market were to climb, I'd rather lose put value and keep my animals open to the upside. If you go ahead and lock in some hedges out there, or you lock in those cattle, find a way to keep that ownership over top to some extent. Because again, the cattle numbers are going to be historically tight. With that in reflection, we're still not to those price levels that we saw back in 12, 13, and 14.
John, how about that dairy market as we're nearing the final couple days here in 2022? What are you seeing in dairy? Anything we need to watch here before the end of the year?
Right now, the trend is not the friend of the dairy producer. Let's just kind of put it that way. We've seen cheese prices really kind of tumble here. I think that's just maybe tied to the lack of demand at the end of the year. We've seen that a little bit in the beef side too, and the pork side. I just don't know if retailers want to keep a lot of inventory going into the end of the year just because of the budget situation, making their balance sheets look a little bit better. Hopefully we see some dairy demand pick up, at least on the domestic front going forward as we get into 23. But that's put prices on a bit of a slippery slope. And with that, some of those deferred contracts, challenging the bottom end, not putting new lows in, but thinking about those July, August lows that are there. I talked with a producer today, maybe that second half of 2023, you might want to start looking about getting some flooring mechanisms in. Again, though, you want to keep price flexibility out there because, again, this market could turn around and run, and I'd rather keep your milk long to the upside versus locking in a hedge or locking in a contract here. But again, just look at those different tools that are available to you to build those floors and keep that price flexibility open in case this market does want to climb back higher.
Well, John, got just a couple minutes here. I know you and I probably won't talk before we turn the calendar to 2023. So any thoughts overall, risk management, anything on your mind producers want to keep on their radar here the last 2 weeks of the year and as we turn the calendar to the next year? I know it feels like maybe a little bit more of the same we've seen this year is going to impact us this first part of 2023. At least to me, it feels that way. What's your thoughts here, just risk management in general these last couple of weeks of the year?
I think we're going to keep a very headline-driven market, especially into early 23. The end of the year here may be about position squaring. Again, the lack of traders into place overall still affecting price. Producers, still make sure you're looking at the bottom line, what you got out in front of you for value. Don't be afraid to find a way to move product or defend floor prices here. Because realistically, if you think back to 2012, 13, 14, especially in the grains, we hit those summer highs. If the weather comes back to normal and production comes back to normal, prices are going to come back down to where we've seen them in the past. And we could be just on ourselves of just a slippery slope that just grinds sideways to lower for weeks ahead. That was very much the case coming out of the drought year of 12 into 13 and 14. Production kind of came back. So we got a lot of time. Obviously, we'll see what happens going forward. But again, when there's value out there, make sure you find a way to protect value, keep the bushels open somehow. It's all about price flexibility, but you don't want to come back here and see things down significantly and you wish you would have in terms of some type of flooring mechanism.
I think the other thing too, don't get caught up in the day-to-day trends, but watch the overall trend, right, John?
Very much so. Take a look at those longer-term charts, the weekly charts, and seeing how those charts are trading out. Those longer trends can develop and they'll stay with the market for a while, especially if the money's flowing that way in terms of the managed money and the investment dollars, things of that nature going forward. You go look at an equity market, I know that's not commodity tied, but that put one real ugly weekly reversal in last week, trading, well over 1,000 points from high to low. Here we are today, Monday, a couple hundred points lower, probably setting ourselves up for a couple week trend to the downside. As we move into the next year. Same thing you look at in those grain markets and cattle markets. Look for those significant tops, significant bottoms. Make sure you're ready to make movement because, again, the money's going to flow with patterns, and sometimes those patterns can be, just outweigh what the fundamentals truly are just because what the money wants to do.
Well, John, if folks need some advice, they're looking at those charts, they're wondering what to do with their marketing plan, I know they can reach out to you there at Total Farm Marketing. What's the best way to reach you, John?
Sure, love chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Don't forget about that website of ours also, totalfarmmarketing.com. As we're going into 2023, maybe make that your New Year's resolution, just at least reach out and ask the question, see what's available to you out there, because the volatility is not going anywhere next year. And I think everybody needs to have every tool they possibly can in their marketing toolbox, going forward.
TotalFarmMarketing.com. John, again, we appreciate your time and contributions to the show here throughout the year, and I look forward to talking to you in the new year, sir. Have a Merry Christmas, Happy New Year, and we'll talk to you in 2023.
Sounds great. Everybody have a great holiday, and if you're going to be affected by the storm coming through, make sure you stay safe and take care of things and take care of your family.
Definitely. I agree with that 100%. John Heinberg, Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen.